Welcome to the Spot On Insurance Podcast, brought to you by Insurance Licensing Services of America, ILSA. This is Ted Tavares.
And this is Arlene Tavares coming to you from beautiful Puerto Rico. Today, we'll be taking a closer look at a topic that affects every single one of us.
But before we get started, don't forget to click on the subscribe button so you don't miss a single episode. And now here's our host, Doug Foresta.
Hello and welcome to Spot On Insurance. This is your host, Doug Foresta. Today, my guest is Maegan DiLoreto. Maegan DiLoreto, thank you so much for joining me.
Thank you so much for having me.
Thanks. So I know we're going to be talking today about the Surplus Lines 101 terms and procedures for those who are new to surplus lines. And I know you're going to share with us some of the different, some of the basics of things that people might need to know. And so actually, before I do that, could you just say a little bit about the Surplus Lines Stamping Office of Texas, and just a little bit about what you're about and what you do?
Of course. Here at the Surplus Lines Stamping Office of Texas, or SLTX as we like to call it, I'm the Communications and Training Coordinator, which means that I distribute news to our stakeholders, which is agents, state agencies, and trade organizations that are in our industry. And our office specifically records all the surplus lines insurance policies that are written in the state of Texas. We monitor the financial condition of the insurers that write this type of policy, and we give education and training materials to agents and brokers on the industry.
Thanks so much. Yeah. So like I said, today we're going to go through, I'm going to ask you some terms that people need to know when it comes to surplus lines. So the first one is policy versus binder. Can you explain what that means? What is a policy versus a binder?
Definitely. Yeah. The binder is a temporary document that binds coverage for the policyholder until the full policy is issued. Usually the binder has the same information as the policy, including the insurer, the premium amount, the type of policy, and it serves as proof of insurance until the policy is issued. But once the actual policy is issued, that binder is replaced by the actual contract. Here in our office, you can file the binder to meet the 60-day filing deadline that we have in place, but once the policy's been issued, it has to be filed in place of that binder. So really, the binder is just the temporary policy.
Got it. Okay, great explanation. So once the policy is in effect, then the binder is no longer needed. Is that the idea?
Pretty much, yes. The policy just replaces the binder once the policy has actually been filed.
Thank you. So my second question for you is about the idea that policies are continuous until canceled. So, this would obviously go under a procedure. Can you explain to our listeners what that means, that policies are continuous until canceled?
This deals with policies that are issued without a cancellation date. So the policy itself usually is a $0 policy, which means that it has no premium amount attached to it. Instead, the policy will have endorsements that are issued monthly for the premium amount for the previous month. The policy doesn't expire until the cancellation is submitted. So if you don't file the cancellation, the policy will automatically renew. And that's what it means, that it is continuous until canceled. It won't become canceled until the cancellation is filed.
Great. Okay. Thank you. And how about authorized versus eligible? Can you explain that distinction when it comes to surplus lines?
This is important when it comes to our insurers. The authorized insurer is licensed to write business in the admitted market, which is where you would get your homeowner's insurance, your auto insurance, and they can only write excess and surplus lines business in the state if they have a certificate of authority in that state. And the authorized insurer is different from the eligible insurer because the eligible insurer can write business in the non-standard surplus lines market, which is what we deal with. These insurers can be licensed in another state, but they don't hold a license in the state where they write surplus lines policies. Usually, the insurer can't be domiciled in the same state that they write coverage in, but in 10 states, there actually is a law where domestic surplus lines insurers can write surplus lines coverage, which means that they can be domiciled in the same state where they write that type of coverage. In Texas, A coverage can only be placed with an eligible insurer in the surplus lines market after a licensed surplus lines agent has made a diligent effort to find coverage first in the admitted standard market. And if they can't find coverage there, then the policy can be written by an eligible insurer.
Spot On Insurance is sponsored by ILSA, Insurance Licensing Services of America, America's premier licensing and regulatory compliance experts. To learn more about ILSA and the services they provide, visit ilsainc.com. So in other words, they have to go through the admitted market first. And if they can find coverage that way, then they would have to find coverage through the admitted market. Is that correct?
There are a couple different exemptions, such as if you are an exempt commercial purchaser. And right now in the legislature, we have a bill going through for another exemption called industrial insured. So if the entity seeking coverage falls under one of those exemptions, they don't have to try and they don't have to put forth a diligent effort. But if they don't meet one of those exemption requirements, then they have to put forth a diligent effort and try to find coverage first in the admitted market.
Thank you. And of course, let's talk about fees. We have stamping fees versus service fees. Can you explain the difference between each one of those fees and what they are?
Of course. So stamping fee is something that we deal with every day. Stamping fee is a fee that an agent or broker has to pay directly to a stamping or service office on the policy that they have filed. This fee exists in states where there's a service office, but some states that don't have an office may also require a fee. Here in Texas, our office collects a 1.5% stamping fee of total premium on the policy, and it's paid directly to our office. The stamping fee is different from a service fee in that a service fee is any other fee included on the policy that is not the stamping fee. So this can include an agent fee, broker fee, inspection fee, or policy fee. And there is no standard system for this type of fee that applies to a policy, but any agent or insurer can add a fee to a policy. And fees are separate from taxes, which is something that's important to keep in mind because the collection of taxes is different from state to state. Like, for example, here in Texas, the tax is 4.85% of the total premium, and that's paid directly to the comptroller's office, while the stamping fee is paid directly to us.
Great, thank you. How about monthly reporting? What does that mean?
When we talk about monthly reporting, we're talking about an endorsement that's filed monthly, generally on a $0 policy that shows an increase or decrease in premium. These policies are different than the normal policy that would be filed where premium is stated one time and the policy is just filed once. An example of the type of business that would use this type of policy would be a rental car company where they're insured on a rate basis. So that means if the business rented 25 cars in a month, it would file an endorsement to count for the premium based on those 25 cars that were rented in the previous month.
Okay, great. Thank you. And then finally, how about installments? Can you explain what installments are when it comes to surplus lines?
Sure. These come into play when you have a policy that's paid in parts instead of all at once. So, for example, if you have a 12-month policy that has a total premium of $1,200, it would be paid over the 12 months instead of all at one time. And just like with the monthly reporting, you would submit an endorsement each month to account for that month's portion of the premium instead of filing one time with the total premium.
Great. Thank you. And I want to make sure, of course, our guest today has been Maegan DiLoreto from the Surplus Line Stamping Office of Texas. If people and they're in Texas and they need help with some of this, I assume that they can reach out to you, right? To reach out to Surplus Lines Stamping Office?
Of course. You can reach us by phone, email, or we have helpful information on our website as well. You can call our office at 512-531-1880 or email our help desk at techsupport@sltx.org. Our website is also undergoing a renovation, so soon we'll have a new website at sltx.org.
Maegan DiLoreto, thank you so much for joining me today, and thanks for sharing these terms that people need to know when it comes to surplus lines.
Yeah, thank you for having me.
Thank you.
Direct your podcast questions to iask@soyteam.com. Share this podcast with your friends and remember to subscribe so you don't miss a single episode.
As always, thanks for joining us, and please remember, We'll be answering this week's podcast questions at Spot On Insurance Facebook, live, Fridays at 11 a.m. Eastern.